It's been a while I created a video for YouTube, and that's because I've been more active on TikTok. To be honest, it takes a lot to combine the various things I do with posting on social media, posting on YouTube. So I tend to take, when it comes to posting, I tend to take the path of least resistance. But you know what? I decided I must post or start posting or resume posting on YouTube, which is why I'm posting, or rather, which is why I made this video. Hopefully this will continue and I will keep posting on YouTube, because on YouTube I'm able to post longer form content that tends to be more helpful. Today I'm talking about knowing your data. And that's I decided to make this post because I am currently in a trade whereby there's a temptation to close out all my trades because I'm currently in profit, and there's also a temptation to enter trades with much smaller stops so I can make bigger profit. But from experience, there are so many things I've learned. Now I've been doing this 15 years. That's a long time. And I've made so many mistakes, way more mistakes than most people have made, because it's very rare to see people that have been doing this this long and are still doing it. So I've made so many I think I said in my previous video that it took me 7 years to learn this, to learn how to trade. So for 7 straight years I was making losses. For 7 straight years I was blowing accounts. For 7 straight years. Most people give up after 3 years, after 2 years. But I did this for 7 years. But I eventually got there. But again, in trading, you never really get to a point where you stop learning, because the market is always changing. So even after the 7 years, I kept learning and learning and learning new strategies, learning new ways to tweak my strategies, learning new ways to quote and unquote beat the market. And that's what I do on a daily basis. That's what every successful trader does on a daily basis. So I thought I would show you the trade I am currently in and show you what people would usually do and what you should not be doing. So I'll go to the chart. Now, if you look at the chart, you can see that I'm currently in multiple trades on USD/JPY, multiple sell trades on USD/JPY. Now, I entered this trade. I entered the first trade yesterday. Yesterday was Monday, so after I was actually supposed to get into the trade on Friday, because that's when my setup triggered. However, I didn't want to enter a trade just before the weekend, so I waited for two things. I didn't want to enter the trade just before the weekend. Also, I didn't want to enter at that price because price was moving really quickly. It was dropping really quickly on Friday. I wanted a better price. So I waited for Monday to come, and I waited for price to retrace back up. And also it was the start of a new week. So I entered the trade yesterday here on this line here, and it went against me for a bit and then started coming back down nicely. I think I entered here and then it went in my favor, then went against me, hovered a little, went against me more, and then today started coming down really nicely, at which point I entered a couple more trades, a few more trades. Now, for those of you that like stacking, you must have noticed that there are quite a few of your trades, quite a few of your stacked trades that go against you. And by stacking, I mean entering multiple positions as price either goes in your favor or goes against you. For the smarter ones, it's usually when price goes in their favor. You'll notice that there are times that these trades, after you've stacked them up, it returns, it goes back against you and takes you out on all your trades, and you tend to make more huger losses when you stack your trades. Now, what I don't really do things that way. When I stack, I move my stop loss. So my stop loss was way at the top previously. My stop loss was somewhere here previously. But as I entered new trades, I started to move my stop loss down such that my total risk either stayed the same or reduced. Because at the end of the day, trading is about risk. It's not about how much you're going to make in the market. It's about risk. So now my risk is here. As price started to go in my favor, I started to move the stop loss to a place that I don't expect price to go back to. So now I've entered my last trade, and price has gone in favor of my trade, but now it's gradually retracing back upwards again. Now the thing is, because I know my data, I know that if price comes up and takes me out at my stop loss, I will be fine, because sometimes price actually does that in this strategy. However, price could also go back down to my take profit. My take profit is somewhere here. Price could go back down to my take profit, and I will make a handsome profit. But at the end of the day, I'm not scared that price is going to go up and take me out, because I am using the right risk that I am willing to lose if price goes against me. I haven't stacked my trades up to a point where I am now scared that if price goes against me, I am in trouble. No, as I stacked my trades, I reduced my risk. Such that my risk is still manageable. And that's how to be safe in the markets. That's how to be safe in the markets while making profit in the market. Remember, it's not a sprint, it's a marathon. It's not a sprint, it's a marathon. So if you know it's a marathon, then you will realize that you really don't need to put all your eggs in one basket. You don't need to put everything on one trade, because that one trade should not make or mar you. That one trade should not determine whether you're going to go begging tomorrow, or if you're going to buy a mansion. Not one trade should not have that much power over you. It's a series of trades that should determine where you are going to be at the end of the quarter, where you're going to be at the end of the year. Okay, so that's what I do. The reason I am able to trade this way is because I have tested. By now, I think I've tested over 500 strategies, and that's because I build strategies really quickly, and I fail fast. So I build a strategy, something that seems to look good, and then I backtest, and then I realize that it doesn't work. I discard it. So within a couple of hours, I've built a strategy and discarded it, and then I move to the next one, and I build, backtest, discard, build, backtest, discard, build, backtest, it works, I store, and then trade it for a while, and then start to build the next one, backtest, discard, backtest, discard, backtest, store. And that's how. So currently I currently trade around 6 strategies, and they are all complementary. They don't all trigger at the same time. Some of them work in a range bound market, some of them work in a trending market, some of them work against the trend, such that my equity curve is smoother, such that when one strategy is not working, the other strategy will hopefully be working. But the reason I'm able to, like I was saying, the reason I'm able to set my stop loss this way is because I have tested hundreds of strategies, and I've realized that the strategies that work the most, or rather, no, that's wrong. The strategies that yield the most profit are the ones that actually don't have break-evens. So I know a lot of people talk about taking partials and moving your stop to break even and all that. Now that's totally fine. If that's what works for you, that's totally fine. However, after backtesting hundreds of strategies, I've realized that the ones that make the most profit are actually the ones that do not utilize break evens. So what I did was, because there is a financial side to trading and there is a psychological side to trading. If your brain is always going to sabotage your trade because you haven't taken a partial yet, or if your mind is always going to sabotage your trade because you haven't moved your stop to break even, then maybe your style of trading should be to move your stops to break even when it reaches a certain point, because it's no point waiting to make that huge profit when your brain can't actually handle it. So yes, at the end of the day, because you've taken partials, because you've moved your stop to break even, you might end up with less profit at the end of the year. But if that's what works for you, then in the long run, you will be making money. And that's what matters, really. It really doesn't matter that you're making the most profit. However, for me, I'm able to handle both. Remember, I said I've been doing this for a while. So my psychology is at a point where I can trade in very different ways. I tend to be very flexible. I do what I think works best for me. And for me, I am more, depending on the strategy though, I am more interested in the profit I'm able to make rather than whether I'm able to take partials or not. I'm totally, for example, in this trade, I'm totally fine with it going against me and going to stop loss. And that is totally fine. But I'm able to set, there's a midpoint when it comes to break even, moving your stop loss to break even. I usually move my stop loss to break even when my take profit has reached 90% of my take profit. So if it's almost getting to my take profit, I usually move my stop loss to break even, because at that point, if it reverses at that point and goes back to my entry, then I am not really interested in that trade anymore. Okay, so there are other scenarios where I tend to move to break even, but most of the time it's when it's reached 90% of my take profit. Some other times I would move my stop loss to break even would be when maybe it's getting late. Maybe it's a day trade, because I scalp, day trade and swing trade. Again, like I said, I've been doing this a while, so I have the mental stability to do different things at the same time. Okay, now this might not apply to you, might not apply to someone else, but again, I've been doing this a while, so I'm able to scalp when the market gives me opportunities. I don't scalp every day because I don't get opportunities to scalp every day. I don't day trade every day because I don't get opportunities to day trade every day. And of course, I don't swing trade every day. One thing I don't do is position trading. I do not have the patience for that. No matter how long I've been trading, I do not have the patience for position trading, but swing trading, I do. And this trade that I'm in is actually a swing trade. Okay, so I was saying that I tend to move my stop loss to break even, apart from when it's reached 90% of my take profit. Sometimes when it's late in the day and it's getting to the time for me to close my trades, I move it to break even, just in case price just reverses against me. Or when it's the weekend, I try to close my trades before the end of the session on Friday. I can always reopen them the next week. However, I realize that when I reopen a trade after the weekend, it tends to go against me. So sometimes I reopen, sometimes I don't, depending on how far price has gone. But the crux of the matter is, do you know your data? Know your data. Do not go and move your stop loss to break even because you've watched someone else do it. Don't move your stop loss to break even because you've watched me do it. Don't decide to not move your stop loss to break even because I said I don't move my stop loss to break even until 90%. Test your data. Go to your back tests. Back test for a year, 2 years, 3 years, 5 years. See what is best for your strategy. and implement that, regardless of what anyone, including me, says on the internet, on social media. Do what suits your strategy and do what suits you. Remember, I said trading is both psychological and financial. The fact that moving your stop loss to break even gives you more money at the end of the day or at the end of the period does not mean you need to move your stop loss to break even, because your mind might not be able to handle that. Because what sometimes happens is you move your stop loss to break even and then price comes up, takes you out, and then goes back in your favor and hits what would have been your take profit, but now you're not in the trade. What happens at that point for a lot of traders, including me, many years ago, they would jump back into the trade because they feel they've missed out, and then it's at that point the trade goes against them, and then they start to revenge trade, and then it all goes downhill from there. So know what works financially for your strategy and know what works psychologically for you in that strategy. If you apply these two things, you will be good. When you stop listening to people on the internet, on social media, including me, just for the sake of listening to them and implementing whatever they say, when you start to make decisions based on your backtest, not anyone else's backtest. When you start to make decisions based on your backtest, you will realize that your results will skyrocket, because now you're doing things the right way. You're doing things based on hard facts, hard data, your data. So know your data.